Welcome to Disrupting Japan, straight talk from Japan's most innovative founders and VCs. I'm Tim Romero, and thanks for joining me. I have always been a fan of enterprise SaaS. In fact, all of the startups I founded have been enterprise SaaS companies. And some of those were back when SaaS was called ASP. But these days, it seems that SaaS has lost a lot of its former shine and sparkle, at least in the US market. Multiples are way down for both public and private SaaS companies. We're seeing a lot of flat and even down rounds. And for the first time in a very long time, American VCs just aren't that excited about SaaS startups. But things are very different in Japan. Today we sit down with Shinji Asada, co-founder and general partner of One Capital. And Shinji explains how SaaS in Japan has had a very different history and why it's likely going to have a very different future than it will in the West. And he brings the numbers to back that up. We also talk about why SaaS valuations continue to climb in Japan, how Japanese VCs are changing, and why Shinji spends his spare time doing inside sales for SaaS products. But Shinji tells that story much better than I can. So let's get right to the interview. So we're sitting here with Shinji Asada, the founder of One Capital. So thanks for sitting down with us.
Appreciate it.
So Shinji, first of all, let me just congratulate you on your recently closed Fund 2, which was just last month, right?
Yep. It was a great adventure because Fund 2 is different from Fund 1. Fund 1 is totally new, where you have to talk a lot about track record and your strategy. And Fund 2, you have a little bit of an easier life because you've started your Fund 1 and you've deployed most of the capital. So you have a story to tell in a concrete manner. So
I'm going to dig into that whole journey in a bit later. But right now, tell me a bit about One Capital. What's your thesis? Who are you investing in and why?
we are a sector-focused early-stage fund focused on enterprise software. The reason is I think Japan has a huge problem with the adoption of technology in the workforce. And I've been working at the Tochu, which is a great company, profitable, large market cap, growing. But the systems that I had to use was very, very old. It's on-prem, customized software. Even under those IT system circumstances, I think corporate Japan is doing pretty well, right? And people didn't actually use digital workflows pre-COVID because we had this thing called the hanko, which is stamps.
Yeah.
That is the typical corporate Japan.
Are you focused mainly on SaaS providers in Japan, or is it enterprise software more generally?
80% of our capital will go into SMB SaaS and enterprise SaaS, but I tend to like SMB targeted SaaS a lot more because those are companies with faster decision-making processes. The average revenue per user is smaller than enterprise companies, but these seed or early stage SaaS companies are just launching their new product out there, so it's not as mature. So the SMB market is perfect. So I like that.
That's really interesting because all of my own startups have been enterprise software. Because normally SaaS is all about scale. You're trying to get the biggest customers with the biggest possible reach, and that's almost always the enterprise. What do you see in SMB SaaS in Japan in particular?
So if you look at the numbers of companies in Japan, 99% are SMBs. So it is a big market. So that's one advantage. And getting the purchase order from these SMBs are faster and a lot more easier than going to an enterprise.
That's for sure.
Right? Right? So you land and expand. You try and scale within the SMB, right? Companies like Notion, of course, they have enterprise companies, but majority of those product-led growth companies are dominated by SMB customers, right?
Yeah. So can you give me some examples of either specific companies or specific SMB software niches that you think are really exciting right now?
Yeah. So we've invested heavily into collaboration software. And we've invested in a company called Ovis, which is sort of a combination of Zoom plus a 2D office. So you have these avatars within these 2D office, and you can move around that avatar and go into a meeting room, go into a sofa, and just talk casually. That company really, really scaled during COVID. That is mainly targeted for SMBs, but enterprise companies started to pile in, and we have a pretty good mix of enterprise customers and SMBs. So
Now, after COVID, I was skeptical about how much of this remote work was going to stick in Japan because we're fighting. Oh wow, decades and decades of we've got to do it face to face, and But I've been really impressed at how much business stays online. Like you mentioned, these are kind of uniquely Japan situations, right? This quick migration from really old school. But how much of this do you think is Japan specific? And how much of this do you think we'll be able to export to the rest of the world?
I think being remote when working isn't a Japan thing, right? This is a global phenomenon, right? It doesn't even have to be the tech industry, right? So I don't think this is a Japan specific thing. But I guess Japan really leapfrogged and caught up with the rest of the world. So pre-COVID was probably something that was very Japan-centric, where you had to be in the office, get a stamp of approval, and just keep shifting that paper document. That is very Japanese-ish.
Yeah. Of the startups that you're investing in, particularly on the SMB scale, where there's a lot more variation in workplace culture than we see at the enterprise level, are the companies you're investing in really targeting a Japan market? Are they targeting the global market, or is it a mix of both?
Within horizontal SaaS landscape, the categories that don't belong within the collaboration space has a lot of low-hanging fruit within the local domestic market. For instance, I was an early investor in Free, which is cloud accounting. And same as you have with any country, the accounting laws, the tax laws in Japan is Japan specific. That is a big market in Japan, so a company like Free should stay in Japan and replace on-prem or packaged software.
But what are you most excited about? What do you see the most potential in now? Is it the Japan market specific startups, or do you see Japan startups being able to add some unique value at the global market?
I see the Japan market as a very low-hanging fruit because those SMB SaaS companies are competing with spreadsheets or on-prem software that is so hard to use, and you have to physically go to the office and use it. But with a modern SaaS offering, it's accessible through your mobile. So the Japan market is super, super appealing. I'll just give you a big number here, right? The annual IT spend ranging from SMB to enterprise of IT is about 200 billion every single year. $200 billion. And SaaS accounts for roughly about 10 billion, which is about 3 to 4%.
How does that compare to more developed SaaS markets like the US?
The US penetration rate within enterprise IT is about 18%. Europe is about 12%. So Japan is like 4%.
Wow.
So we need to still catch up to the rest of the world.
But that is a lot of opportunity then.
Right.
From the enterprise side, Japanese enterprises totally embrace the concept of SaaS, at least.
Yep. Once you experience how easy and modern and how productive using these SaaS tools are through products like Zoom or even Google Meet, and then you start asking, why aren't the other software that we're using modern yet, right?
Yeah. The difference is really painful when you jump from modern tools to the old IT.
Exactly.
In Fund 1, you were providing digital transformation advisory to your LPs. You're helping them with their own internal tools. Is that something you're still doing going forward with Fund 2?
Yes. When I started Fund 1, there is the typical route of going to an LP and talk about potential IRR or cash on cash and soliciting your fund as a financial product. I thought that was purely boring. Why isn't VC innovating from an LP standpoint? So we brainstormed, why don't we create a hybrid model from LPs? One is the pure LP, which is looking at IRRs and returns. The other strategic LP base should be about solving their own internal strategic problems around digital transformation. And it's simple, offense and defense. And what do I mean by defense? We would search and understand what your internal systems are. And usually these enterprise companies that came in as digital transformation LPs, they have about 200 internal systems. And 99.9% were on-prem. So we would offer an alternative, a modern SaaS product. Not everything can be switched overnight. There are some mission critical things that should be on-prem. We would work on a project like that and seriously modernize the internal IT.
I think your CVC roots are really showing in that approach, right? The delivering strategic value back to the LPs.
Mm-hmm.
So do those conversations kind of inform the types of startups you go out and find?
No, that is totally separate. Our investment mandate is 80% SaaS, enterprise software. We'll focus 20% on subscription-based businesses that are in healthcare and finance. But the majority of the investments are going to be enterprise software. So there is no influence around that. It's just that we help these companies, the huge digital transformation objected.
And so some of the startups you'll introduce will be portfolio companies, some will be pipeline companies. It'll just be whatever it might be useful to them.
Yes, exactly. So we are definitely not a corporate VC of that LP.
Let's talk a little bit about traditional VC and CVC in Japan. Because you've got a long career in CVC in Japan. I think the first time we met was back when you were at Itochu.
Totally.
I think I was trying to get you to invest in one of my startups, as a matter of fact.
Maybe that was the case. Yep. Yeah, Itochu is actually independent VC and also a corporate VC. Itochu is not the 100% LP. Itochu is the 20% LP, and the 80% comes from financial institutions looking for IRR. When we invest in a company, we will help them penetrate the Itochu group company as a potential customer and also a distributor.
So what made you decide to move on from Itochu?
When I was an investor at Itochu, it was a rotational position. So the maximum duration that I was able to stay there was 3 years. I was there at around 2.5 years. I loved the job, so I had the chance to meet the Salesforce Ventures team in the US. And I went to the pure corporate VC role at Salesforce. And it was a great organization, a great strategy, and I learned a ton. There were some challenges. Any position, you have highs and lows, right? The lows was that since it was a strategic investment program, when you had an amazing portfolio company that you invested in an early stage, there were some challenges doing follow-on investments because the whole notion of the partnership program was if you strike a deal, then you have a partnership. Salesforce becomes your partner in the sense that they attach their product into the Salesforce ecosystem. Once you have that in place, it's not really necessary to do a follow-on because it's not going to strengthen the partnership, right? So my goal was to invest in new companies all the time, right?
Right, but all the return comes from the follow-on.
Exactly. All the returns, and also there's a lot of trust that's built when you do a follow-on with the entrepreneur, right? If you pass on it, even justifiable reasons, there is a market signaling risk for the founder. So I am in the business of serving the founders as a VC. So I decided to move on and start my own independent VC.
Awesome. So you've worked quite a bit both in San Francisco and in the Japan ecosystem. Do you think CVCs play a different role in Japan than they do in the US?
Totally. And I think there should be an adjustment within the corporate VC in Japan. You have to be very strategic as a corporate VC because you're essentially utilizing the balance sheet of the parent. That investment should be used in a very strategic way that adds value to that corporate. There are a lot of corporate VCs in Japan that are like an independent VC looking for an investment upside. Leave that to us. A corporate VC has an amazing brand, an amazing reach. Utilize that asset and maximize your shareholder value. And let me give you an example. I think there's probably several models of doing corporate VC. One, when you invest in a company, that product or service should serve that company's customers. So in the case of Salesforce, Salesforce had this marketplace called the App Exchange. An obvious example is a company called Sansan, which is business card management. Everybody has a business card in Japan. So the challenge of Salesforce without Sansan is that when you exchange a business card, you got to read the business card's data and type that data into Salesforce. That's pretty painful, right? That was one of the reasons Salesforce Japan's users were churning from Salesforce, because it was such a nightmare entering data. When Salesforce and Sansan partnered from a product level, all you needed to do was exchange a business card, scan it through Sansan, import that into Salesforce. And that really solved the churn issue of Salesforce. That's why Salesforce Ventures invested in Sansan. That's how you should strike this model.
I agree. And Sansan's a great example of a company that for Salesforce was both strategic and provided some great financial return as well. But from a lot of the conversations I have, I think a lot of CVCs in Japan, actually globally, but especially in Japan, I think a lot of CVCs start out with the idea like, okay, we're going to provide strategic value. And then either because of problems getting that internal collaboration or because returns aren't as high, they end up getting kind of spun out or pushed out and say, okay, we're just going to focus on financial returns. But I agree totally. A CVC's reason for existence is to drive value back to the parent.
Yep. And I think Salesforce does an excellent job of doing that. I was hired as an investor. Some of the interview questions were around, do you think you can do hot deals? Right? That's what a top VC firm would ask, right? But you need that kind of people, because if you invest in a very, very low probability startup and you put it in the ecosystem and you introduce that product to a customer, and let's say they like it and they start using it, but that company fails to raise money and goes out of business, what's going to happen to that data? That is a huge reputation problem. So you need an investor guy that has the hat on to actually evaluate the company if it's going to be really, really successful or not. Right? Then you need the business development guy that understands the nascency of the stage of the product, but you need an organization structured to really help the startups.
Do you think Japanese VCs are more strategically focused than US CVCs?
Many of the Japan CVCs, they say that they are strategic, but I think, they're more financially return driven, which I don't think is sustainable at all, because let's say you have a huge company like Toyota doing a non-strategic CVC role. Their net profit is huge. Even if you gain 10 million of capital gains, which is a pretty big deal for me, that doesn't mean anything for Toyota, right?
Yeah. And the market would discount it anyway because it's not coming from their core business.
Exactly. It's not car automobile sales, right? It's like...
Even if they win, nobody counts it.
Exactly.
Let's talk again about SaaS in Japan, because I know that's a subject close to your heart. So on one hand, okay, everyone loves SaaS. Margins are great. They're easy to measure. You can track it. You know if the startup is on target. But in the US, actually, SaaS, we're seeing a lot of down rounds. We're seeing, a lot more flat rounds and extension rounds. And this once extremely hot sector is kind of cooling off a bit. In Japan, it still seems pretty hot. Is something unique in Japan that SaaS uniquely addresses here?
I think it's purely a time difference. The US SaaS market evolved a lot quicker and became a lot bigger. And then you had the zero interest rate age. So the demand and supply of cash was very imbalanced. So even you had, I don't know, $2-3 million of ARR, some of these companies were valued at unicorn levels. But Japan is late to the game. And we have a huge market that I just explained about, the 4% penetration rate of SaaS. So there's a lot of catching up to do. And we had COVID, so there was a lot of fast forwarding. So there's a lot of revenue upside for Japan SaaS right now. Compared to the US market, Japan VC is probably 1/30th or 1/20th the size. The VC market is growing. I mean, within the past 7 years, we 10x, but we're still at around 10 billion of annual investment into startups. So it is big, but relative to the US, it's still a small market. And I guess the numbers of unicorns, not only SaaS, but in total is about 10 to 12 companies. In the US, there's about 650. So there's a lot of, I think, fake unicorns in the US. I think it's purely a time difference thing. When Japan becomes as big as the US market, it's probably going to take another 5 to 10 years. Then we'll see maybe 300 unicorns in Japan popping up, but like we're still a small
So
market.
that makes sense. So we're looking at earlier in the market, the valuations are lower, the penetration is much lower. So yeah, that's a lot to love here about SaaS in Japan.
Totally. Yeah.
So what makes a great SaaS company? What are you looking for when you're evaluating and investing in SaaS companies here in Japan?
I take a very simple approach. It's the product. A lot of the VCs talk about the earlier stage you go into. But I think if you have such a great team, you should be able to build a great product. So why not focus on evaluating the product? And in order to be in a position to evaluate if it's a great product or not, we try our best to use amazing SaaS products all around. We probably use over 100 SaaS apps right now to run our firm, but we also use SaaS product that's not even needed for a VC firm, right? Like marketing automation, DevOps, all that stuff. Even blog related SaaS products like ConvertKit. And based on that experience, we have a definition of what a great SaaS product looks like from a login to log out perspective. And I know we're never perfect. We're still learning on the job, but like we love to look at products, period.
That's really interesting. Most VCs, when I talk to about SaaS, they're like, well, here are my 3 favorite SaaS metrics, and this is what we're looking for. But you guys really take a evaluation of the product, use it kind of very subjective, a feeling of using the product from a user's point of view.
Totally.
Wow. Do you have favorite metrics, or do you really focus that much on the product?
So based on stage of the company, we have objective, measurable KPIs that we look for. If you are pre-revenue, obviously you don't have the kind of metrics. Retention rate is what we only focus on, right? A Series A company we think should be around 1 million of ARR. A middle stage company should be between 3 to 5. A late stage should be over 10. And we focus on seed and early, meaning pre-revenue and 1 million of ARR. That's our sweet spot. We do a little bit of middle stage, doing 3 to 5 million of. So that is one metric that we look on.
That makes sense. I mean, if you're looking at quality of the product and traction in the market, it's hard to go wrong with that. Before you guys put out the One Capital Cloud Index, are you still doing that?
Yeah. We've extended that use case to a new product that we launched called the Projection AI Database. It's sort of like the Bessemer Cloud Index with a lot of data. We have about 100 companies in that database. So 70 companies are US, 30 companies are from Japan that we categorize as SaaS. And we capture metrics like ARR, NRR, and all that SaaS metrics of publicly listed companies.
We'll put a link to that on the site so people can check it out because it's really cool. What are your thoughts on generative AI right now?
I love it. I use it every day. Generative AI needs to be integrated with all SaaS companies because SaaS is basically a system of record. It has a lot of closed data within that organization, and there's a lot of learning that should be done with that data to help the users be more productive. So I'm asking and telling all of my portfolio companies to embed AI into their products.
Wow. Right. Let's step back a bit and talk about Japan in general. So since you've started your career in investment, since way back at Itochu, how have you seen Japanese founders change in that time? What's been the biggest change you've seen in Japanese founders over that time?
When I entered Itochu back in 2000, that's way long ago, I still had the privilege of meeting founders, and not to sound too critical or negative, some of these entrepreneurs were people that weren't able to land a job at a big company or even a mid-sized company, right? They had to choose to only become an entrepreneur because they weren't able to be hired. Fast forward a decade, you have amazing founders from amazing companies. It was the recruits, it was the Mitsubishi Corporation, Itochu Corporation, like these large companies had entrepreneurs like pouring out. I think today you have, the Googles, the Facebooks, the Salesforce Japan members spinning off and starting companies. And also, you have amazing Japan tech startups going public, and the early members, not the founders, but the early members, gaining experience and gaining confidence, cashing out their stock options, and starting their own companies. So at One Capital, we really focus on these two groups, the ex-US tech companies that enter Japan and the Googles of the world, starting companies, and really members of these tech companies that went public. So those are the two entrepreneur base that I'm actually scouting right now.
Yeah, I think you're right. The quality of entrepreneur, both in terms of the, what can we put it, social status of the entrepreneur, because back in the dot-com era, a lot of founders started companies because they didn't really have a better choice. There was not a whole lot of other options. And I guess to some extent, I'm in that category. And now, yeah, some of the graduates of the top universities, senior level people at major corporations are quitting to start companies. And that's amazing. But also the quality of education, the logistics and how to build a company is much better understood now than I think it's ever been before in Japan. So yeah, I agree. We've seen a tremendous increase of quality among founders. What about the change in VCs you've seen over that time?
I think VC is lagging compared to how the startups and the founders have evolved and become high quality. That's why, at One Capital, we took a very unique approach in raising capital, using that consulting as a service concept, but applying that model to a typical LP role. I think there should be more innovation in Japan or VC in general, and especially for like the investing area. We shipped 3 products within the SaaS realm. One is the database that I just mentioned. The second one is we have a financial model builder that through 3 clicks, then you can create a very robust financial model. VCs should also be able to build a product and understand how to scale products, right? Of course, scaling the product isn't our main mission, so we've kept that to a decent level.
That's a very interesting point. Yeah, you're right. A lot of Japanese investors think about investment far too narrowly. That they tend to be very, very smart finance people.
Yep, totally.
And they don't think about products, whether that product is something you're offering your portfolio company or an actual information product like the cloud index. And yeah.
And through developing and shipping those products, I've learned a ton about SaaS, right? Not just from the textbook, but
I bet, yeah.
Real world of shipping a version and then having to debug issues and getting yelled at by customers. And I actually do inside sales sometimes with these products. And some of the founders that want to use this product are like, hey, Shinji, why are you on this call? I'm like, I'm the inside sales guy. But at the same time, that's also deal sourcing for me because I'm targeting the early seed stage companies to use my products.
And I think that gives you a real credibility with founders. Even if you haven't really started a real startup yourself, going through those experiences for real when you don't have to, and you're not going to get a $1 billion exit. I can see that buying you a lot of credibility and goodwill.
And that's what I think lacked within myself during my prior investment roles, because you were the person that was choosing the companies, but at the same time, it's actually the opposite. The amazing founders have to choose the VC. And those are the companies that you should be investing in. So I was like, what are the ingredients of being chosen by these amazing founders? And my short answer was to speak the same language. And my questions when I do diligence is not about what's your TAM, what's your go-to-market strategy. These companies typically reach 1 million, as I said. So my question as a product founder myself, I'm like, how did you get to 1 million? I am still at like 100K. I am suffocating. I've done this marketing, I've done this, sales motion. What have you done to achieve 1 million? Teach me. And, that is a very different way of asking the same question from like a typical VC saying, how did you make it? Why aren't you at 3 million of ARR? Why isn't it that easy? Like that VC's never even done it. I've never done it. So you get a lot more modest and a lot more respectful for the founder. And that's what I really gained through that experience of building a product and shipping it and having a hard time.
Oh, that's awesome. I think you're right. There are a lot of particularly successful old school venture capitalists in Japan who haven't really accepted the idea that the founders are choosing who their investors are. You know, it's a hard thing to really get your mind around the first time.
Totally.
So with things changing so fast here in Japan, is there anything recently in the last 12 months or so that you've changed your mind about?
Yeah, I mean, Fund 1, I had a team, and I have a bigger team right now with Fund 2. But especially for Fund 1, it was all about me. What I mean by that is I had the most experience as an investor. So deal sourcing, diligence, investing, hands-on help, like I really had to do a lot. And I thought that's what founders should do. Like, you have a product CEO, he does selling, he does marketing, he does hiring, right? But in the past 12 months, fortunately, I've been able to hire amazing talent. And I'm at a stage where I am trying to scale the process of being a better VC, of offloading the work that I thought I should do all around. But at the same time, I am the biggest contributor in terms of deal sourcing because I've been in the market and I'm the visible figure in One Capital. So I need to be the deal magnet. When there's a deal that we need to win, I have to be very aggressive in winning that deal. So that is the role that I'm still keeping from Fund 1 to Fund 2. But diligence work, hands-on support, board management, I'm getting our team members a lot more involved, and the outcome is actually great because it's 10x what I'm able to do individually.
But you're going to continue to do inside sales.
Totally. Got more time to do that.
Excellent. Well, listen, Shinji, before we wrap up, I'm going to pull out the crystal ball and ask you, what does Japan's ecosystem look like in 10 years? And what does One Capital look like in 10 years when you're raising Fund 5?
10 years is pretty quick, Tim. I think it will look like entrepreneurship is too obvious. I think we're in a stage where you've been explaining and also emphasizing that it's change, right? Because it wasn't the thing to do 5 or 10 years ago, right? It is starting to become the thing now, but like 10 years from now, I think entrepreneurship is everyday thing. Everybody's going to try it now. I'm not hoping that. It's definitely going to be like that. The government is involved. There's more talent pouring in. There's even, US amazing entrepreneurs coming to Japan and starting companies like we saw with Sakana AI, right?
Yeah, I agree. I think that trend is already hitting. I mean, I've done startup workshops at high schools, and it's awesome. There's so much enthusiasm. I don't have to go in and explain like this is what a startup is. I mean, they know. It's great. I think that change is already underway.
Yeah. Thanks to your helping out these high schoolers, they're going to be entrepreneurs when they're around 20 or 25, right?
Yeah. I mean, everyone playing my own small little part in it. Do you think we've hit that tipping point? So, like you say, the government's pushing on it. The universities are. High schools are inviting people like me to go and talk to high school kids. It really does seem like all of society is behind this, at least in spirit. So do you think we're going to see this huge ramp up in entrepreneurial activity, or do you think we're going to see kind of this steady, even growth that we've been seeing over the past 10 years or so, where we get this steady like 20% annual growth?
I can assure you that steady growth is there. That's how Japan as a nation has always grown, right? Steadily and steadily. That's the culture, right? But there's probably going to be spikes here and there with, amazing founders doing big IPOs. And that will be the tipping point. We're almost there because there's a lot of venture-backed companies raising 100, 200 million right now. And those are going to blossom to creating revenues bigger than 100, maybe 200 or 300, right? And debuting in the public markets in Japan or elsewhere in a very big way. We need more of that. And those will be symbolic, which will solidify this tipping point, and the rest is history, right? We need the Mark Zuckerbergs. We need these amazing founders that is iconic in the US, similar to Japan. We need that. And there are lots of potential companies here in Japan with lots of venture-backed capital.
Awesome. Well, Shinji, thank you so much for sitting down with me. I really appreciate it.
Likewise.
And we're back. You know, I've always favored enterprise SaaS over its smaller SMB sibling. But Shinji makes a good point. It's easier to sell to SMBs, and in Japan, there are many industries that remain highly fragmented, with a lot of aggressive, profitable SMB players competing. And as Shinji points out, with SaaS penetration in Japan still so low, multiples on SaaS startups still pretty reasonable, and money continuing to flow into the sector, well, there's a lot to love here. And we expect to see a lot of growth and innovation from Japanese SaaS startups. Even more encouraging, though, is the trend we discussed of Japanese VCs increasingly adding real value to the ecosystem. Shinji is doing this by helping his investors develop digital transformation strategy and helping them to become more comfortable working with startups. And he's helping his startups by really digging in and finding out what it takes to scale. One inside sales call at a time. Right now, the Japanese venture capital industry is in the middle of an important transition. More and more firms, and definitely some of the best ones, are moving away from the old invest and monitor model and finding ways of adding value to their portfolio startups. And also, I suppose, making sure that their portfolio founders feel valued. And that's a huge part of building a meaningful startup ecosystem in Japan. If you want to talk more about SaaS in Japan, Shinji and I would love to hear from you. So come by disruptingjapan.com/show222 and let's talk about it. And hey, if you enjoy Disrupting Japan, share a link online or just tell people about it. Disrupting Japan is free forever, and letting people know about the podcast is the absolute best way you can support the show. But most of all, thanks for listening. And thank you for letting people interested in Japanese startups and VCs know about the show. I'm Tim Romero, and thanks for listening to Disrupting Japan.